Welcome to KonceptCraft. Introducing the Accounting Arena book, your ultimate guide to mastering the fundamentals of accounting. Embrace the world of accounting knowledge at your fingertips. Act now, and get your copy of Accounting Arena ebook. Link is available in the description below. Keep learning. Keep growing. Happy learning. Now let's begin our today's lesson. The Accrual Method. The accrual method is a way of accounting that records revenues and expenses when they are incurred, regardless of when cash is exchanged. This means that you recognize income when you earn it, and you record expenses when you incur them, even if you haven't paid or received cash yet. The accrual method gives a more accurate picture of your business's financial performance and position, because it matches the income and expenses to the period in which they occurred. However, the accrual method also requires more bookkeeping and adjustments, such as recording accounts receivable and payable, accruals and deferrals, and bad debts. The accrual method is generally required for businesses that have inventory or that are corporations with annual sales over $5 million. Prepaid expenses. Prepaid expenses are costs that have been paid in advance but have not yet been used up or consumed. For example, if you pay for a year of insurance in January, you have a prepaid expense for the next 12 months. Prepaid expenses are recorded as assets on the balance sheet and are gradually expensed over time as they are used up. This way, the expenses are matched with the periods in which they are incurred. Prepaid expenses can include rent, subscriptions, licenses, insurance premiums, office supplies, and more. Unearned revenue. Unearned revenue is a type of liability that arises when a business receives payment from a customer before delivering the goods or services. For example, if a magazine publisher sells a one-year subscription to a customer, the publisher cannot recognize the full amount of revenue at the time of sale. Instead, the publisher has to record the payment as unearned revenue and recognize a portion of it as revenue each month when the magazine is delivered. Unearned revenue is also known as deferred revenue or prepaid revenue. It is important for businesses to properly account for unearned revenue because it affects their financial statements and tax obligations. Unearned revenue is reported as a current liability on the balance sheet until it is earned and becomes revenue on the income statement.